Thanks for tuning in to your daily dose of quick real estate updates, local housing trends, and market data, plus tips, tools, and strategies to help you buy, rent, or invest with confidence. You're now getting ready with RealiCare Reports, powered by the innovation team, Cami and Rex. Now go grab your favorite morning breakfast, coffee or tea, and let's enjoy today's episode.
Welcome to today's deep dive. We are so glad you're joining us because, well, we've got a fascinating one for you today.
We really do.
Yeah. So I want you to imagine a city skyline, right? And it's just dotted with active construction cranes.
Oh, yeah. They're everywhere right now.
Exactly. Brand new apartment buildings are springing up on like every other block. You've got those big now leasing banners hanging in the windows. Developers are throwing move-in specials at people.
First month free, waive deposits, all of that.
Right. But yet somehow your rent is higher than ever. And the idea of actually buying a starter home, I mean, it just feels completely out of reach for the average person.
Oh, totally. It feels impossible.
And it isn't a glitch in some dystopian simulation, you know? That is the very real, highly contradictory American housing market of 2026. Because for decades, the universally accepted mantra from economists and urban planners was essentially treated as an undeniable law of physics, which was just, we just need to build more.
Right. The logic was always really simple. Supply goes up, prices come down, crisis averted.
Boom. Fixed. But the June data coming out of the highly anticipated State of the Nation's Housing Report, this is from the Harvard Joint Center for Housing Studies, shows a completely fractured reality. We're using a really phenomenal breakdown by Tristan Navera at Realtor.com to guide this deep dive, and it just defies that old rule entirely.
It really does. The landscape has fundamentally shifted, and we're looking at a market where those traditional models, they simply don't map to reality anymore. I mean, depressed demand colliding with harsh affordability challenges, those are the defining stories of 2026.
Yeah, it's wild.
What's fascinating here is that when you look at the macro data in this Harvard report, the raw numbers present a staggering contradiction. Construction of new units is actually up, overall population growth is down, and yet the average American is still entirely locked out of the market.
It makes no sense on paper.
No, it doesn't. It's a fundamental mismatch. It requires us to look much closer at the underlying financial mechanics, of what exactly is being built right now, and more importantly, who it's actually being built for.
Okay, let's unpack this. Because on a surface level, the numbers feel like they're honestly gaslighting us.
Oh, absolutely.
Right. Because according to the Harvard data, population growth is aggressively tapping the brakes. And this is being driven by, well, a couple of things. Long-term declining birth rates, for one, combined with stricter immigration enforcement over the last few years.
Fewer people coming in, fewer people being born.
Exactly. And simultaneously, builders are sitting on a steadily rising inventory of new units for sale. Like, this is a trend that's been building up since 2023. Wait, if there are fewer people forming new households, right, and more homes available, basic economics says prices should drop.
You would think so.
I mean, it's like showing up to a buffet right before closing time. Shouldn't everything be on discount?
That's the logical assumption. But the market is fundamentally mismatched. And to understand the mechanics of why, we have to look at research from Daniel McHugh. He's the lead researcher on the Harvard report.
Okay, what did he find?
Well, McHugh notes that household formations have actually declined for the fourth straight year.
Wow. 4 years.
Yeah. We're down to just over 1 million new household formations, which that's the lowest level we have seen since 2017.
Jeez.
Right. And the why is really important. Young people are taking way longer to buy. They're staying with their parents, or they're, packing into multi-roommate situations because the financial entry price to step out on their own is just way too high.
But it's not just the young folks staying put, right? Like, the older homeowners are a massive part of this too.
Oh, a huge part. And this is where the financial mechanics get incredibly tight. You hear that older homeowners are cost-burdened, which it sounds confusing at first. Like, if they've owned their homes for 20 years, shouldn't they be fine?
Right, you'd assume they have tons of equity.
Exactly.
Yeah.
But when you look at the localized mechanisms, you see skyrocketing property tax assessments. Plus, you have a national insurance market that has literally doubled premiums in many states because of climate risks.
Oh, wow. Yeah, the insurance hikes have been brutal.
So even if they have a paid-off house or like a legacy 3% mortgage, their fixed carrying costs are surging. but they physically cannot afford to trade down to a smaller home.
Because resetting to a 2026 interest rate on a new property would just destroy them?
Right. A new rate plus modern closing costs completely wipes out whatever equity they had, so they just freeze. They refuse to move. Existing home sales have basically flatlined since 2023.
So nobody is moving out of the entry-level homes, which means young people can't buy them.
Exactly. Chris Herbert, he's the managing director of the Harvard Joint Center, he explains this perfectly. When we see financial headlines saying housing finance is getting closer to balance because construction is up, it's completely deceptive.
Because of where the building is happening.
Yes, the market is only flooding at the top end. The luxury landlords, the high-end builders, they're the ones slashing prices, which pulls the national averages down on a spreadsheet, sure.
Right, but it does nothing for normal people.
Virtually nothing for the working class on the ground.
Okay, so the market is flooding at the top end, but everyone else is just drowning. And when you look at who is actually getting squeezed here, the demographics are completely shifting.
Yeah, they really are.
I mean, close to half of all renter households are paying an outsized portion of their income on rent. Half.
It's a staggering statistic.
It really is.
Yeah.
But the most surprising detail to me was that the demographic where cost burdens are rising the absolute fastest isn't who you might expect. It's not just minimum wage earners. It's middle income earners making like $45,000 to $75,000 a year.
Yeah, that specific bracket is getting squeezed so hard.
Yeah.
And a report from the National Low-Income Housing Coalition really provides the broader context here. Nationally, we are short 7.2 million for-rent units for the 11 million low-income people in the country.
7.2 million units short. That's an unbelievable deficit.
It is. Meanwhile, the share of homes affordable to the median income has been violently cut in half just since 2019.
Cut in half in just a few years. So what does this all mean for the listener? I try to picture it like this. The current housing market is basically like a clothing store, right? And this store only manufactures luxury tuxedos and, evening gowns.
Okay, I see where you're going with this.
And they are completely ignoring the fact that the vast majority of their customers are walking in desperately needing everyday winter coats.
That is exactly it. Perfect analogy. Because when the middle class gets priced out of those winter coats, they don't just disappear. They cascade downward and start competing for whatever is left.
Right. Which pushes the lower income earners out completely. Okay, here's where it gets really interesting, though. Because if the middle and lower classes are so desperate for housing, why are builders only creating those luxury units?
Right, the tuxedos.
Exactly. And the data shows another paradox. Rental unit vacancy rates have actually rebounded. They went from like 6% back in 2021 to almost 8% now.
Yep, thanks to that post-pandemic apartment boom.
And Harvard even projects the rental shortage is going to shrink from 1.5 million a few years ago down to 700,000 over the next decade. So if the shortage is shrinking, why isn't it getting cheaper?
Well, this is where we have to look at the economic reality check, or what the industry calls penciling out. Sharon Wilson-Jano, she's the president of the National Multifamily Housing Council, she steps in to explain this. Builders are exclusively constructing Class A type units.
Class A being the luxury stuff.
Right. The luxury units with the pools, the gyms, the quartz countertops. Because those are the only ones that actually pencil out on a balance sheet right now.
Because of how much it costs just to build anything.
Exactly. In the current environment, with the cost of materials, the labor shortages, and especially the high interest rates on construction loans building moderate income units, simply doesn't work economically.
The developers would literally lose money on every unit.
They would. Without increased subsidies, it's mathematically impossible for them to build affordable housing. As Jano notes, the highest income renters have never been so comfortable. They have tons of options.
Well, the rest of the market starves. But wait, what about the nonprofits, the organizations that are supposed to build affordable housing?
They are suffering immensely. Marietta Rodriguez, the CEO of NeighborWorks America, reveals a truly devastating stat in the report. She says affordable housing deals have plummeted by 60% in a single decade.
60%? Wow. So the private market won't do it, and the nonprofits physically can't do it.
Right. The financing is just too difficult to secure now.
So if the free market physically cannot afford to build housing for the middle class without going bankrupt, does the whole system need a reboot? Like, are we just completely broken?
Well, yes and no. If we connect this to the bigger picture, this is actually where we find the silver lining.
Oh, thank goodness. I need some good news.
Right. Well, Chris Herbert points this out, and it's a great quote. He says, "The problem has become so significant and so ubiquitous that it's leading to creativity.
Creativity born from crisis. I like that. And we are actually seeing that momentum building across the country, right? States and local governments are finally starting to remove these massive historical barriers to housing.
Exactly. The sheer desperation is overriding the old bureaucratic hurdles.
Like with ADUs, accessory dwelling units, we're seeing wide acceptance of ADUs in areas that used to strictly ban them. People are just putting tiny homes or apartments right in their backyards.
Which is huge.
Yeah.
Because you completely bypass the cost of buying raw land. The homeowner just optimizes the footprint they already have.
Right. And we're also seeing a massive push to embrace manufactured and factory-built homes as viable, affordable housing. Because if you build a home on an assembly line, you cut out weather delays, you need fewer specialized laborers on site, and it's just way cheaper.
It fundamentally changes the math of what pencils out. And it's not just residential zones either. Municipalities are pitching multifamily housing directly in commercial zones now.
Oh, like putting apartments in old dying strip malls.
Exactly. Removing old parking minimums, rezoning those aging AUKUS parks.
Right.
It creates housing and revives the commercial tax base at the same time.
That's brilliant. So it's not just one single fix.
No, and that's Harvard's ultimate conclusion here. There is no silver bullet. The answer is basically an every idea all at once strategy.
Every idea all at once.
Right. You need the zoning reforms. You need laws allowing denser housing. You need policies to cut construction costs and red tape. And you have to mobilize public and private financing to preserve the existing homes we already have.
Before private equity just buys them all up.
Exactly. All of it has to happen simultaneously.
So to kind of summarize the ultimate shift here for everyone listening, we really have to completely change the national conversation. It isn't just a math equation of build more anymore. As Chris Herbert said, it's no longer just about overall supply. It is about supply at what price point and for whom.
And that is why this matters so much to you, the listener. It doesn't matter whether you own your home, you're currently renting, or you're desperately looking to buy.
Yeah.
This structural shift impacts the literal makeup of your local community.
Because if the teachers and the nurses can't afford to live there.
Exactly. It hollows out the community. It affects the businesses that can survive in your commercial zones because they can't find staff. It affects the economic health of your neighbors. It's a deeply interconnected ecosystem.
It really is. Everything is tied together. So I want to leave you with a final thought to mull over, building on all this source material. Harvard says the solution requires this every idea all at once strategy, right? Including rezoning commercial spaces and heavily relying on factory-built homes. If these sweeping creative changes actually take root across the country, ask yourself, how completely unrecognizable might the physical landscape and the very definition of an American neighborhood look to previous generations just 10 years from now?
It's going to be a fascinating decade.
It really is. Thanks for taking this deep dive with us.
Well, that wraps up today's episode of Reality Reports, where real estate meets real life. For more updates, tools, and insights that will help you buy, rent, or invest with confidence, be sure to follow, subscribe, stay connected, stay informed, and stay ready. Until next time.